You're watching today's video technical update presented by FX Times. It is Friday, March 5th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. Last Friday, I took a look at the yen crosses. It was noted the euro and the sterling were the weakest against the Japanese currency, and that the commodity currencies had a chance to fade against the yen strength as they have been strong. The dollar-yen pair has been also weak, but is already at a major low, so the greenback also had a chance to bounce back against the yen. Let's take a look at what materialized this week. This video is being produced at about 2 p.m. Eastern Time, a couple of hours before this week's trading ends. The euro-yen pair was able to keep the market above 120 here, as this week was basically consolidation, and Friday price action was signal for reversal accompanied by this bullish divergence. So we may be having a short-term reversal for now, but the market hasn't broken this previously broken support here. It's also nearing this resistance, so we'll see to start next week if indeed we will have further rally. And even if there is a further rally, we see a lot of resistance right here at the previous power line here at 127. So even if there is bullish action, treat it as a short-term push and look for topping action in this previous power line. Otherwise, we may top off around here the next week, and if it does hold below the previous high here, we will have what will be called a bearish reversal, where our momentum indicator indicates further strength than the previous peak here, but price is actually lower, so that would be a very bearish suggestion for this pair. So once again, the market has been subdued, but is showing some signs of bullish action, although that could be just a short-term pullback. Looking at the 4-hour time frame, we see that this pullback so far has retraced 61.8%. Okay, so keep that in mind as we continue to look at the other yen crosses. I mentioned last week that of all these yen crosses, that the pound yen looked to be the weakest, both from momentum and price action perspective. And this week, the market, like the euro yen, consolidated for a little bit, and Friday price action shows some bullish attempt here. So this bullish attempt is testing, well, let me get rid of this. This is just a projection, a swing projection. We see that the market almost hit the 129 swing projection, 130 swing projection, but didn't quite make the 100% projection. However, it's near that, and we see that the market is supported above 132. So we are seeing retracement, and we might see topping action here at the broken trend line and a near 50% retracement at 1.38 to 1.39. So this zone here, if the current rally persists, we might see topping action very soon. Now remember, in the 4-hour time frame, we saw that the euro-yen pair already retraced 61.8%. Here we see the pound-yen pair only retrace up to 38.2%. Another sign that the pound-yen pair is weaker than the euro-yen pair. So both of them are. We're seeing pullbacks in both euro and pound yen pair. Although the pound yen pair looks like it's not gonna have such a significant retracement. So here at the 50%, we might already be seeing topping action. But if it doesn't, we look for topping action from this declining trend line, and a break of that would indicate bullish. A successful bullish attempt. So far we haven't tested these trend lines yet, so the bullish outlook is within the short term or near term outlook. Here's a look at the euro-yen pair, the dollar-yen pair. First of all, the swing projection brings it down to 87, but the market started to reverse here above 88. So that was this week's reversal of yen strength due to some risk of appetite towards the end of the week. So here we have a rally, and once again we're going to look at the 4-hour time frame, and we see that this market also retraced about 61.8% of this previous downswing. And as I mentioned, the dollar yen is also weak like the euro and pound yen, but looking now again at the daily time frame, we are at a major low here. So there's more probability that the pound and the euro yen has more room to decline, while the dollar yen might already be in a in an oversold area. In any case, the bullish outlook again is only in the short term until we can break this long-term declining trend line in the 200 simple moving average. So just like the euro and pound pair, look for topping action here. If there's no bearish signal to follow and there's a break above, then we could invalidate this projection to the 87. See, the market can now looking back at 4-hour time frame, the market can still top off here to start next week, and if it does, and there's a bearish, a strong bearish move, then the move to 87 is still viable. But if the market it sustains the current strength, and on a pullback, if the decline, we got to watch out for the decline, because if the decline also bottoms before this previous consolidation area, then we might have another swing up to test our intermediate term long-term declining trend line. So the market is very choppy, and there isn't really a strong conviction for the market for the dollar yen in either direction in the intermediate term. In the short term, we are bullish, but this could be just a pullback from this previous decline. Okay, so that's the dollar yen. As I mentioned before, the commodity currencies have a different dynamic against the yen, and for the Aussie yen here, we have already been in an upswing. This current yen strength was this swing here, and this week the market continued to rally. So as I mentioned, to fade yen strength, the Aussie and the Canadian dollar were the most probable currencies to do that. So here we see that materializing, this continuing the previous swing, and the projection is to the 85 area. Looking at the 4-hour time frame, we see that the market already retraced 78.6% of this previous decline, whereas the euro had we saw euro at 61, dollar at 61, and the pound yen at 38.2. So this is also showing a very strong retracement that could turn into a bullish swing here to the 85 area. The Canadian dollar has a similar dynamic against the yen as the Aussie, but it's actually showing slightly more strength, as we see here. This swing projection is more close to the swing projection than the Aussie yen. And as we look at the 4-hour time frame, it actually broke above the 78.6% retracement. So the Canadian dollar is showing the most strength against the Japanese yen currency these couple of weeks. And once again, looking at the daily, we see that the swing projection brings us to the 89 area, or it might fall short of that here at the 88.80 area, which is 78.6% retracement. But judging from the current aggression of the rally, we may actually extend this swing projection. But for now, a conservative swing projection brings this market to the 88.80, 89 area. And that's it for this week. Visit fxtimes.com for more fundamental and technical updates, as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you a great weekend.